Forex Investors Alliance SignatureTrade. How's everybody doing today? Today's video lesson, we are going over our SignatureTrade. It has been a few days since our last video. Nonetheless, we are up and rolling once again. I had a few problems. Well, not really problems, just a few personal life events. Had to move into a new place and get internet all set up. Thankfully, that went all smoothly and it's all set up right now. And we're back in business. So, today's lesson or today's video, I have saved this setup for you guys for quite some time now. It's basically a setup that I have come across that is a very, very unique and highly probable setup. A very highly probable setup with a very profitable risk-reward ratio. So after basically trading this setup and going over it for the past few months, I've come to a point where I've realized I should disclose this setup, this information, because I have been trading it and talking about it in the groups as well, so I might as well just go forward with it and show you guys what it is, what exactly is the setup. Now, no indicators are necessary, no indicators, no templates, there's none of this Fibonacci or pitchfork stuff. We're just going to be looking at price and patterns in price. That's all we're going to be using. All you need is your eyes and you know, your brain, a little common sense. So before we start, I'd like to give a shout out to forexcommunity.online. If you are not in our community, it is basically a group chat where we have thousands of traders from all around the world coming together, sharing analysis, sharing their trade ideas. If you're not in that group, you're missing out on a lot of fun, action, and profits as well. So feel free to join forexcommunity.online. You can put it right into your browser here, click enter, and you will be redirected right into that group. Same with forexalerts.online. This is our channel. We send free Forex alerts and ideas to this channel, so feel free to join that as well. Last night we caught a good 60 pips on CHF JPY. So yeah, forexiapro.com as well. That will be our education course we are developing. It is currently in process for development. It is about 75% completed. If you would like to learn more about this trade and our trading style, feel free to go to forexiapro.com. In our course, we have this trade set up, a full lesson on this trade setup. We have a full lesson that is dedicated just to this setup. So, before I say too much, thank you guys for joining once again, and now let's go over some of the characteristics of this trade and how to trade it. This is our signature trade. What we're going to be looking for, this is based off of the M and W formations that we have traded in the past and that we will be continuing to trade. basically what this trade is, and what we will be looking for are wedge formations. Once you see a wedge, which we've all seen these wedge patterns happen uh, on every pair. All right, these are fractal formations. These are multi-fractal formations. So this will happen. This pattern can form on every pair and on every time frame. So there's not a specific pair or a specific time frame that this trade occurs, or the setup occurs. But you may want to start off at a lower time frame, for example the 15-minute, just so that you can get a feel for how these trade setups play out in a shorter period of time, instead of going on the 4-hour chart or the daily and waiting a few days for the trade to play out. You can go on the 15-minute or the 1-hour chart and play that micro time frame. So basically what we are looking for is the wedge formation at either the high of the day or the low of the day. Now let's say this is a wedge formation at the high of the day. What we're going to be looking for after we see the wedge is the tip of the wedge to break out to the high, and then stop hunt that high, trap orders up here, and then drop, creating that M formation. So that's all this trade is, you guys. No indicators necessary, no averages, no templates, none of that junk. You don't need any of that to trade this. And this is a very high probable setup. So wedge breakout, second leg M or W to the high or the low of the day. So let's go to the session breaks just to see our daily, our days. And I have a few already marked out for you guys. Like I said, this occurs on every pair, across every pair on every time frame, so not just the GBP JPY. This happens on every pair, and it happens a lot. So we'll be going over a few different ones that have happened just the course of a few months on this one pair, and then we'll probably venture over to a few different pairs. So basically we can see price has been uptrending, and then we have price hit a high right here, and then we can see for about 2 days price consolidated in this area. But not only in consolidation, we can see as well it's forming that wedge. What happens then after that wedge forms? And what we can see here as well is that the tip of the wedge likes to form. Okay, I'm sorry. I don't know why these lines are being drawn so bad. Must be my trackpad or something. You'll see the wedge, the tip of this wedge will form Asian session. And Asian session, oh my goodness. Asian session we know to be the session in which we have that consolidation period, and it would make sense that the tip of the wedge would form in Asian session for that consolidation, the very tight range of consolidation. Now, what happens after Asian session? Asian session ends, and then there's that breakout, and then London session. You can see London session, the high is worked. The high of the previous day, or the previous structure high, is worked for about 2 or 3 hours until finally price is finally dropped right before New York session. So that's just one example. Now, here, our second characteristic or rule is to go with the trend. Now, this trade wasn't going with the trend. If you took it, it would have been a sell going against the main, what looks to be a uptrend, but it's optional. Going with the trend is optional. It's obviously a lot more. It's a lot better to go with the trend. It's more advised to go with the trend. But if you see a setup like this, and you are confident in the setup, then by all means take the setup. You don't have to go with the trend all the time. But if you're a beginner, make sure you are going with the trend at least, most of the time. So, second leg breakout caused by news. Now, there will be times at which you see these wedge formations forming, and then right at the peak or the tip of the wedge, it will be like price consolidates all day, and then right at the tip of the wedge, you'll see a high impact news event comes out at that exact time. It's almost like it's not a coincidence at all, you guys. It's not a coincidence at all that this high impact news event just happens to occur at the breakout of this wedge. It's set up like this. The market is set up like this. So what does this M formation do? Other than, we've gone over the wedge forming like this, and then the breakout of the second leg traps. Now, I don't know about you, but when I was a retail trader, or I should say, when I was trading mainstream retail information, I was taught to, graph this wedge like this and then trade the breakout. So trade, let's say the breakout is to the upside, trade to the upside. So we're taught to buy this upside movement. We're taught to buy this. And then we're taught, to stay in that trade even though it goes completely against us. We're misinformed. We're taught misinformation, you guys. And this is on purpose. The dealers or the creators of this $5.5 trillion market are not going to, they're not in the business to help you. They're in the business to take your money. So that's basically what's going on. They've spread misinformation and lies all around to get people sucked into these trends, these false strategies that do not work. Now, the main reason this strategy does work is because we're going off of a concept that is very it has to happen. It's a reversal. When a reversal happens, this I'd say about 8 times out of 10 this pattern has to occur because of the concept behind it. Now, I've gone over a few times in a few different videos this concept, but let's just go over it one more time. Basically, when the M formation happens, let's say price is going in an uptrend, right? So price is uptrending like so. When the retail trader sees that uptrend and he graphs these these points of support, resistance, whatever he calls them. And at that first leg, that high, he, or the retail trader I should say, will place his support and resistance lines right here. Now this line is going to give this retail trader all the confidence he needs to take this trade and to place his buy stop orders in this area to catch what he believes is the trend going and continuing that upward movement, that uptrend. So this is what he sees. He sees this right here. He sees that bounce from that breakout of this support, or I should say resistance, to create a support and then continue that uptrend. But what actually happens is much different. Price will break out of the support, or resistance. Price will break out of resistance and then stay up, and a lot of times close up above that resistance, confirming to the retail trader that that is a buy. Not only confirming that it's a buy, but as well as stopping out any sellers that have their stop loss above this high. What happens next is the dealer will then move the market back below that resistance after activating any buy stop orders that happen to be in this area above that high. So that's what's going on. The market is staying in consolidation and creating that wedge formation until there's that breakout to the high, which that breakout has several purposes. Not only to break out and grab the orders in this area, but also to catch the retail traders in their buy positions, get them into buy positions before reversing the market on them. So basically that is the concept behind this entire trade, this entire setup. And now that you know that concept, it's a lot easier to understand these fractal scenarios, these multi-fractal setups. So here's another great setup. We can see the low of the previous day, and the previous day was created right here, and also the low of the week. Looks like the low of the week as well. The low of the week is about right here. So we can see the low has not been broken, but it is being worked ever so slowly. Now, what we also notice is this wedge formation forming here, and then we can see as well the breakout of the wedge, or I should say the squeezing point of this wedge, the tip, the cone, the point of the wedge happened Asian session. So the consolidation period happened Asian session, and then we can see it went back into that zone where they kept working. It stop hunted. One candle is all they needed to break out One candle is all they needed to break out, and then grab as many orders at that low of the day. Once again, I'm sorry for my, I don't know why this is doing this trackpad. It actually seems like I'm not sure. Alright, so the wedge forms Asian session, breakout occurs London session. This is exactly what I was talking about. The wedge, the tip of it a lot of times will form Asian session, and then the breakout will be at the end of Asian session or the beginning of London session, and then London session, they will reverse the market against the trend, or I should say against the retail traders positioning. So the breakout, remember the breakout to the low, induce retail traders to sell while at the same time activating those sell stop orders and then moving the market against the retail traders. So here is another one. This one I like a lot. This setup, it occurred a few weeks ago. I did not, I don't know if I traded it. I'm not sure. I don't believe so. But anyway, it is a beautiful setup. We can see for 3 days, just about 3 days, 2.5 days, the market came up and worked this area, the high. I'm just going to stop drawing on these candles because it's messing it up. So we can see that wedge formation as well. The tip of the wedge, what do you know? Asian session. Breakout in one candle. That breakout, one candle, gives 15 minutes to any retail traders to buy when they see that breakout. And then what happens? In 30 minutes, boom, there is a 100 pip crash from that wedge. How could we have traded this? We could have seen, well, number one, that high has not been broken for 3 days. Number two, Asian session is in consolidation. Let's wait for a breakout to either the high or the low for London session. And then we can also see that stop hunt to the high. That stop hunt also takes out any retail trader sellers that have their stop losses in this area. And then we can see that downward push. That is a 250, 260 pip drop within about a day and a half. This trade, you could have had a 15 to 25 pip stop loss and then a few hundred pip take profit. The larger the wedge and the larger the breakout, obviously the larger the move, the larger the profit margin you will have available. So here's another setup. Same scenario, you guys. The low of the day has been set right here. And then that wedge formation forms. Notice once again, the wedge is in basically Asian session. The tip of the wedge was created, and then that one candle, that's all that's needed to break out and induce as many retail traders to sell as possible. And now you can see that W formation forming at the low, a smaller W as an indication of a buy. And then one candle once again as a shift out of the zone for over 100 pips. Let's go one more. Same scenario, same thing. The wedge formed, the tip of the wedge, Asian session, breakout London session to the low of the previous day. There's your stop hunt in that one candle right here, and that's your confirming entry. So wedge forms, Asian session, breakout London session, stop hunt to the higher low, confirming entry. Now, if you don't know what a confirming entry is, please go to our previous videos. If you don't know where our previous videos are, check out forexvideos.online. We have a bunch of videos. It'll direct you right to our YouTube channel. But yeah, confirming entry. You will have to understand the candlestick formations, the candlesticks that are occurring, to understand how to get a good entry, how to understand what is a confirming entry. So just go back and check out one of our confirming entry videos. So basically that was today's video. Wedge formation, breakout London session to the low of the previous day, and then rise. So yeah, that's our signature trade. This is our signature setup. It occurs, like I said, across all pairs and all time frames. Let's go on a different pair just to check out. I know this pair had our signature trade set up just a few days ago because I traded it. It was very nice. I actually I saw the Euro CHF come to a basically rally for a day, and then it came up and spiked up to create this high. Create this high right here. And then I placed a sell limit order at exactly this high. And I did so right about here, Asian session, and then I went to bed, and London session, you could see the breakout of London session to the high in one candlestick. My order had been activated, and I believe I had a 25 pip stop loss or so. The price went about 12 pips into drawdown, which I was sleeping at the time. I woke up and price was about right here, 50 pips in profit. Very nice trade setup. I stopped myself out Asian session for about 50 pips at the start of Asian session here. So very nice trade setup. Our signature trade, like I said, this occurs across all pairs on all time frames, you guys. So if you have any questions, concerns, if you would like to learn more about this setup or about how we trade, check out forexcommunity.online or forexalerts.online. This was today's video. If you learned something new, please feel free to give it a like, thumbs up, subscribe, share the video. Thank you guys for watching once again. Peace out.